Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey at Bolt Marketing, and grains all in negative territory. Livestock futures mixed to lower as well. And Dwayne, let's talk about the grain trade first of all, right across the board, as I mentioned, and it felt like a consolidation day. Was some of this profit-taking farmers selling or what?
It felt like we just kind of ran out of bullish news, didn't it? And when you run out of bullish news, that equals the profit taking. And yeah, I mean, we're in gut slot of harvest here, so there's always farmer selling going on, especially with these rallying these markets now. So yeah, it felt like a quieter day. I know it was a quieter day in this office, but that's what happens when farmers get out in the field, right? They don't want to talk to me nearly as much as normal. So quiet, but yeah, pull back. I don't like where we closed today. Quite a bit of red, and we tried to rally around the noon hour, but man, wheat really pulled us down towards the end, and soybeans as well, out of maybe just lack of buying interest.
Yeah, and the lack of buying interest, maybe the funds stepping away here. I mean, they have covered a good portion of their short position. Are they done, do you think?
I do think they're done. I think they're flat right now, and I think on the wheat complex, I think they're flat as well, which is rare for me to say. It seems like they're always short the wheat complex. So now that they're out of their short positions, and I can understand why. Maybe there's uncertainties with the war tensions in the Middle East, and so maybe you don't want to be short anymore, especially if you have some profits. But the big question now is, do you really want to be long? And I don't think they have that story in either one of those two markets right now, Michelle.
Right. Really, all of the grains, though, Dwayne, have run up into kind of the next level of chart resistance and some retracement levels too, haven't we?
Yeah, we sure have. 38% retracement on December corn. We went above that on Nove beans. Feels like that 1050 is a little bit of a psychological number now for Nove beans, but I'm glad we're talking about November beans, because you got option expiration coming in a couple weeks, and if harvest pressure, it looks wide open in the Midwest for the next 2 weeks, right? So you should see a massive amount of farmers selling in the next 2 weeks. It would just make sense, the timing for me to push this market back down to say a nice strike price level of maybe like $10 for the puts and calls. That would not surprise me at all, especially with this lack of bullish story. I mean, there is some talk of yields being down in some areas, myself included, but boy, it sounds like the yields in Illinois and Iowa are still very high.
Yeah. And we've had fund short covering, which has kind of overwhelmed some of the farmer selling, or the harvest pressure, I should say. But as harvest picks up, it's going to be pretty hard to keep the market from not going down, isn't it?
Right. I'm glad you brought that up, Michelle. We talked about the rally recently in soybeans, and that's been funds getting out of short positions. Well, if they're not going to go long and they're just kind of absent this market right now, it'll open the door for the farmer to take control and sell this market. Remember, according to USDA anyway, there's a lot of farmer selling that needs to still happen. They're not very forward sold on soybeans or corn this year. So that's what I mean. In the next 2 weeks, you should see max farmer selling. And if I don't, if the market can stay here throughout the next 2 weeks, then I might have to change my thinking on these markets and just feel like, well, it looks bullish, but I'm very skeptical right now and leaning towards the bearish side. And if you got some soybeans to town, I'd rather you not pay storage. I think you should reward the market and just sell it right here.
And the grains, we should also point out, we're probably putting in some weather premium for different reasons. In the case of corn and soybeans, maybe some of that coming from South America, and there is some rain in the forecast. So that market is maybe keeping an eye on that, isn't it?
Oh, absolutely. I think the weather kind of shifted after our last month and a half of flash drought here, which is maybe took us a little bit off the top. We've talked about that for a while, but now all focus is on South America, correct? And they've gone through a massive dry cycle here, but it's normal this time of year. Starting to plant now, we're watching their planting pace. So far, it's just fine. But there is rain in the forecast, October 8th in Argentina and about October 10th. It should be coming in for northern Brazil. If we come back on Sunday night and Monday and these rains are realized or look stronger in the forecast or heavier, boy, that also is going to put pressure on the soybean market. So you had farmers selling, weather premium being taken out and funds maybe not buying anymore. Soybean market could fall back pretty hard if that is the case.
Yeah, and very likely drag corn down with it. The wheat market had put maybe a little bit of weather premium in as well with some of the Black Sea issues. Australia's having a few problems. So have we just maybe gotten enough weather premium in right for the time being?
I kind of think so there. I mean, that's a nice rally in the wheat market. It wasn't, you're really $1 off the harvest lows. what more do you want if you're a wheat producer? We combined some pretty good wheat up here. Spring wheat yields were spectacular. If you've got it in commercial storage, I think you got to reward this and let it go. And like you said, at least we've put in enough premium for now. I think to make that next leg higher, get above like the 200-day moving average, you're going to need another bullish story. And I hope that's not war premium being added in the Middle East, but if something crazy happens there, I suppose that could do it. You're going to need something to make the funds want to not only get out of shorts like soybeans, they have to go long now. And I don't see that right now, Michelle, but man, overnight anything can happen. You and I could talk a total different story tomorrow.
No, I'm glad you bring up war premium, because wheat looked like this week it was putting in some geopolitical premium. Corn may have gotten spillover from the higher crude oil, which was putting in some war premium. So that's something we still need to keep an eye on, right?
Oh, absolutely. Yeah. I mean, and then it ties back to crude oil as well. If crude oil rallies, then soybean oil rallies. And then that ties the guys that are spread between meal and oil, and they might have to exit position. So it's all this big web of the commodities we trade in. I often tell my clients, like, for example, if soybeans traded in a bubble right now, I would think it needs to go lower, but it doesn't trade in a bubble. If corn and wheat rallies sharply higher on geopolitical concerns next week, soybeans will follow too. So you're right. It's everything is in a big jumbled mess, and we have to watch everything.
The one thing we haven't talked about when we talked about harvest pressure was yields. And we do have the USDA report coming up next Friday. And of course, that's going to be a big key for whether yields are going up or down. What are you thinking we'll see?
I don't think USDA is going to have enough information to lower the yields myself. I farm in Northeast South Dakota. Right here, the yields aren't bad. We've got a little bit of farm over in Minnesota. The yields are poor there, but I anticipated that. We had a rough spring there, horribly wet to start, and then horribly dry to end. And I am hearing that, and I'm listening to those producers who tell me the yields aren't as good as they think, but I'm also seeing these yields in Illinois and Iowa that are just spectacular. And when you look at how many acres they plant, if those two states yield really high, Michelle, it's really hard for the rest of us to pull the average down. So I don't think the yields are going to drop. I think if anything, well, I'm going to just call it steady. I don't think USDA should move them, but you never know. But don't be shocked if they increase them just a little bit. And that's another reason why I'm a touch bearish this market. We do have a big crop coming.
Live cattle futures ending lower on Thursday after new highs for the move on Wednesday. So was that just profit taking, or was it hedge pressure, or what?
I think a combination of both, Michelle. We've rallied a long way, so some short covering, wouldn't be shocking at all. And hedge pressure, it's funny, I hadn't thought about that too much, but I think that is okay if producers do want to do that. The problem is, from what I hear, they're paying for a lot of the calves. We're not close to anywhere where they're locking in profits yet, which kind of blows my mind a little bit at 186 for December live cattle. But I'm friendly to the market. I think it has to go a little bit higher. So no, to answer your question, probably just short covering, profit taking. We didn't take out yesterday's lows though. No. So the market looks very good, very strong structure here. Cash cattle trade 186 in Texas yesterday, I think I heard. So it's still trending higher, looks good. The only thing really negative about this cattle market that concerns me is the weights. But it's been that way for almost a year now, Michelle. And it's helping packers get through this lighter inventory season we've had, or year that we've had. But it's concerning, but yet this market still looks bullish to me.
Yeah, and you mentioned the cash, and we don't have a lot of it, but what we've heard so far has been higher. And if the volume is higher, we could shoot right back up tomorrow, I bet. So
right, good, well said.
Yeah. What about the hog market? Setting back today in the nearby contracts, but man, that market has just been a big outperformer here. The funds, are they driving all of it? Is it better underlying demand than we thought, or what? What do you think?
I think mostly funds. Demand evidently has been good. It's been good for everything, but that's definitely a market that I wouldn't mind producers looking at as far as hedge strategies. If they're bullish and want it to go higher, I don't mind. Then maybe we look at a put option. But I was looking back at last year, what happened seasonally, and we were up around this price level, and then we ground pretty hard down in December. So I think we're at levels that I think a guy should look to put some hedges on. I mean, the market looks strong, the trade action looks good, but it just makes me nervous. And these are pretty good prices.
Yeah, we made new highs for the move yesterday. It took out the September highs, so that would be a logical place to do a little hedging. Maybe that's what we saw today. I also wonder about the fact that we faded the exports. We had really strong exports this morning, over 43,000 metric tons. Is that just kind of buy the rumor, sell the fact?
It always seems to be in the hog market. It seems like they know those numbers before you and I see them. So it
True.
probably is a buy the rumor, sell the fact a little bit. And remember, those were really solid export numbers. We're back when the US dollar was right at about 100. Now, since we've rallied a little bit, it's still a low dollar. So I think it'll still help our exports. But that's probably why almost all of our sales in the weekly export sales were solid, because the US dollar was lower.
All right. Thanks for joining us, Dwayne Betsy with Bolt Marketing. That is Markets Now.